the Japanese ETF. All right. This is iShares MSCI Japan single country ETF. So this ETF is focused on one country, Japan, country-based ETF. So this ETF is tracking the index composed only Japanese equity. The fund offers express a single country view and again target exposure to the company in Japan. So they are focused on the larger cap Japanese company in Japan. So the equity for the larger cap Japanese company. Let's take a look here. The hypothetical $10,000, 10 grand growth. So you put in the 96 all the way to March 26. 10 grand became 20 grand, almost 25 grand. Not that much. Japanese has since 1989, Japanese has lost a decade. Now it's 3 decades has lost. So there are not too much economic growth in Japan, the aging population, so on. All the manufacturing is outsourcing. They still produce cars though. They used to be a largest economy in the world, even bigger than the United States. But there's another story for that. We're not going to talk about that. So the fund is index fund, weight-based index fund, focus on Japanese market. So you can take a look here. The fund and the benchmark is very close, so that's good. We want to, if it's index fund, we want to fund return close follow up to the benchmark. All right, take a look at the year performance, calendar year performance. 2021, 1%, 22 negative 17%, 23 20%. So go up and down. It's more volatile than let's say American stock market. 24 7%, 25%. Did pretty well on 2025, but everybody is doing well on 2025. So annualizing performance. Okay, on average, you put a 10 grand, put the money into Japan for 10 years, Japanese index fund for 10 years. You got 8.5%. That's normal, right? That's not too bad, but it's not too good. That's just the ordinary. In the long run, like 10 years, 20 years, 30 years, the US Fortune 500 company, S&P 500, grows 8% per year, corporate profit. So that's okay return, I guess. But you have to consider this is a falling company, this is falling stock, this is falling equity. They are denominated not in a US dollar, in a yuan. The fund is denominated in a US dollar, but you have to consider once you get those returns, you have to exchange it back to the US dollar. So there's a currency exchange involved. So there's other risk, your currency risk. Let's take a look at what kind of company they are all holding. Toyota Motor Corp. As you can see, everywhere in the United States, Canada, there's Toyota. Almost every family purchased a Toyota. Almost most family. I mean, many family purchase a Toyota, like Camry, Corolla, or other kind of Toyota car. So Toyota, the Japanese car, including the Mitsubishi here, is very popular in United States. Also, the Mitsubishi is the company used to produce the aircraft during the World War II for Japan as well. Sony Group, you can think about it. All the PlayStation 1, PlayStation game, PlayStation console is made from Sony. So let's take a look. Mitsubishi, Tokyo Electronic, yeah. So that's the other thing. You have to purchase foreign equities, international equity. Is you get exposed to foreign company. If you just buy S&P 500, you will never get a Toyota Corporation Index or Mitsubishi Index. And just take a look how many stuff you buy every day is made in from other country. The car made in Germany, the car made in Japan, made in Italy, and all the stuff you buy made in China. Yeah, everything you buy, a lot of stuff, almost everything you buy is made in from other country. So you don't invest in international equity, you're missing out. You're missing out the investment opportunity. That's why we always encouraging investing a foreign company to as a hedging. They're gonna put together as a one single portfolio, like 50% foreign equity, 50% U.S. equity into a single portfolio. So you get broad exposure to a global equity instead of just United States equity. All right, let's take a look at the sector. Industrial sector 26%, financial sector 17%. So that's all the consumer discretionary 15%, and so on. Overall, the Morningstar for the rating, 3-star. I mean, you can take a look at the Morningstar, but never make your investment decision solo on the Morningstar rating. I mean, that would be just stupid. Do your own homework. As equity, well, the phone has launched in 1996. That's very long ago. Back in the day. Trading on the New York Stock Exchange. Hey, let's take a look at management fee. The management fee is much more than S&P, like a 0.07%. This is 0.49%. Basically, you invest $100, you put 49 cents into a management fee. So it's much bigger than the S&P 500 index, although both are index fund. But if you consider it's 0.49%, it's still not too much. So that's still a good deal if you want to invest in Japanese equity. The management fee is not that much. Any management fee lower than 1%, I think is acceptable. It's all depending on what kind of fund you invested in. I mean, for the index fund, the management fee should be kept lower because there's not too much management involved in the index fund. It's not like an active fund. They are active research, looking for a new stock, looking for a stock that has lower valuation, looking for a stock with high growth rate, looking for a stock with low P ratio. This is index fund, so it's weight based. Basically on the size of the company, decide which company be in the index. So there's not too much research involved. So it shouldn't be more expensive. 30 days yield 1.3, that's not too much. PE ratio 18%. Well, that's lower than the S&P, right? But still has relative high valuation considered as equity compared to other international equities, especially those emerging markets. For example, those equity from the Russia is like a single digit PE ratio. The Russian stock, the Russian equity is like a single digit. I mean, that's impacted by the war with the Ukraine. But as you know, equity usually don't stay in a single digit PE ratio for long, forever. But there's investment opportunity in Russian equity, Russian stock. But the political risk, the geographic risk is also very high compared to investing in Japan. At least Japan is not in a war with any country right now. At least for now, but we don't know in the future. They always have the political risk there. Standard deviation 13%. That's standard deviation measure the volatility of the stock. Number of the holding 178. That's enough diversification for the stock, for the equity index. Okay, this is the iShares MSCI Japan ETF. By the way, I need to say this disclosure in the beginning, but I said now. I'm not giving any investment advice. I'm not telling you what to invest. This is not investment advising. If you want to invest, do your own homework, make your own decision. And the investment involves risk, including losing all your money. And the past investment historical return cannot predict future investment return. All right. Okay, that's it. That's the EWJ, a Japanese ETF, Japan ETF, single country focused ETF. Here we go.